Assalamu alaikum friends. So this is the continuation of part 1 of question number 1, Luploid. So before I start, let me recap what I have done in the previous video. I have finished part A, both the section of part A, where we calculated the fair value, how fair value is determined, and why depreciated replacement cost was not a reasonable estimate of fair value. And then we did goodwill. We calculate goodwill using the two methods of calculating NIC. One is fair value, the other one is proportionate share of net assets. So these were the two things which we stopped, and then today we are going to do part B and part C. Okay, part E is for 11 marks, you can see, and it is about the calculation and the allocation of impairment loss. So we are going to deal with impairment loss. We are going to discuss why the impairment loss would differ when the NIC was measured in two different ways, and calculation and explanation of how impairment can have an impact on the consolidated financial statements. Okay, so let us read the impairment part because we didn't read that part yesterday. As you can see, I've also noted that is for part B. So Colors and Company incurred losses during the year ended 30th June 2008 and an impairment review was performed. The carrying amount of the net asset, including fair value adjustments on acquisition but excluding goodwill, you see, excluding goodwill. This shows that goodwill in the previous part A, usually impairment will affect goodwill also. Because of impairment, your goodwill reduces. But here they are saying that here it is excluding the goodwill. That the reason why they are saying is they wanted to show that your part A and part B are not related. You don't need the impairment for doing goodwill. Okay, are as follows. So this is the net assets. You can see land and buildings, plant and machinery, intangibles other than goodwill, and current assets at recoverable amount 106. Okay, now the recoverable amount is, okay, wait. So let me do this. The recoverable amount is 100 million. You see, your net asset is more than your recoverable amount. That means definitely there has been an impairment. Okay, because your recoverable amount should always be less than your total net assets. Including in this assessment was a building owned by the company which had been damaged in a storm and needs to be impaired by 4 million. Okay, the building. Next, other land and buildings are held at recoverable amount. None of the assets of the company, including goodwill, have been impaired previously. You see, including goodwill have not been impaired previously, and the company does not have a policy of revaluing its assets. Okay, so only this much you have to read for section B. The next, all accusation of harm on company and share-based payment is not needed for part B, it's for part C. I've already denoted it. So now let us go to the answer of part B and see how it is written. Okay, as you can see, it is already marked. Okay, all this things has been calculated in has been shown in part 1 of this video. So let us just go through the answer, just see the presentation, how it has been answered. Okay, it is not answered in one shot. How to answer this question? If you want to answer this question, you have to break down this information into small pieces to get the 11 marks. I will show you the marking scheme at the end. Okay, after I attempt part B. So if you see, this is subheading has been used impairment. Then we have fair value method. Why? Because two methods has been used to calculate NIC. Okay, because it will change. As you can see here, they have discussed also as our numbers are also there, so it's to both calculation and all. Okay, then we have the proportionate method, the same way how we have done for the fair value. It is the same way. Okay, this table is here where you have the original, this, the impairment, then the revised. See, okay, and then so that's it. Okay, let us go through it. Impairment. So first we have to talk about impairment because this question itself is about impairment. How do you start? First you have to write whether there is actually an impairment or not. Usually, most of the time, okay, not most of the time, it's you will be having an impairment. They will give you a question when impairment is there, because otherwise there's no point of giving you something where there's no impairment. But for to show the examiner that you have understood that something has impaired, you need to write this. Okay, an impairment arises where the carrying amount of the net asset exceeds the recoverable amount. This has to be written. Okay, let me put it in bracket. This has to be there. You need to write this. This is your first statement when impairment comes. Because your carrying amount exists. Okay, carrying amount of net assets exists. Okay, it exists the recoverable amount. We just saw this was 106 and this was 100. The recoverable amount was 100, carrying amount of net assets was 106. Okay, let me show you. Just see here, 106 is the carrying amount and 100 is the recoverable amount. You see, it's more. Net asset exists the recoverable amount. That's why there's an impairment. You need to write it because this question is discussion plus calculation. So you need to discuss also, you need to calculate also. Okay, but this state for this lines, you don't have to calculate anything. It's already given. Carrying amount of net assets is given. Recoverable amount is given. Just write the sentence. That's it. Okay. Next paragraph. Where the cash flows cannot be independently determined for individual assets, they should be assessed as a cash generating unit. You have to talk about cash generating unit at this point because you can see there are so many assets are given here. You need to allocate this impairment. Whenever the allocation of impairment comes, you have to talk about cash generating unit. How am I saying allocation of goodwill? Because in the requirement, if you see here, allocation. Whenever the impairment loss is there, when you have to allocate and when you are given this, where is it? The assets here, like this, land and buildings, plant and machinery, all those things, you have to talk about cash generating unit. Okay, it's a concept. When you're studying impairment, this what is this cash generating unit? This concept is there. Make sure that you study it from there. Okay, what is cash generating unit? The definition they have given here. That this is the cash generating unit. You need to talk about it. Okay, what is cash generating unit? That is the smallest group of assets which independently generate cash flow. This is the definition. Next we have impairment of cash generating units are allocated. You need to write this also. This has to be there. Let me highlight it for you to understand the importance of it. The whole thing, okay? This needs to be there. The reason why, because they tell how it is going to be allocated. And there are so many assets. So how do you know, how do you allocate, which asset are you going to allocate first, which asset, how are you going to allocate? So all those things you need to write it in sentence. That's why I've highlighted in yellow to show you it's very important. Okay, so the impairment of cash generating units are allocated first to goodwill. You see, it is allocated first. It is allocated first to goodwill. Very important. It's a rule under impairment when you study. Whenever impairment is there, impairment of cash generating unit are allocated first to goodwill only, and then to the other assets. Okay, that also you have to write, and then to the other assets in proportionate of the carrying amount. This you need to write, not just other assets. How do you allocate? Just according to your wish? No, there's this proper rule. See, everything in SBR, whenever you answer, there is a rule for it. There's a rule behind it. If you're not understanding an answer, you have to go behind the standard and see what the standard says on it. Nothing is from your wish, okay? So, other assets in proportion to their carrying amount. No asset should be reduced. This also you have to write. That this is the last sentence. Okay? Follow the sequence of the answer. How they have answered, how you have to answer. First, they talked about that carrying amount exists net assets, that's why impairment. Next, they talked about cash generating unit. Third, they described cash generating unit. Fourth, they told that impairment will be allocated to goodwill and then to the other assets in proportionate to the carrying amount. Then finally, they concluded that no asset should be reduced below its recoverable amount. You cannot reduce an asset. What is the recoverable amount? 100. 100, right? You cannot reduce an asset below 100. It should be 100 only. Okay, this also you have to write. No asset should be reduced below its recoverable amount. You need to write it. You're getting points for it. Don't think any sentence written is not so important. They have just written it. No, they haven't written any sentence just for the sake of it. There's a reason behind why they have written something. That's why you have to read line by line and understand each line rather than memorizing the whole paragraph and copy pasting it. Next, come to the fair value. So we talked about impairment is over now. Let us go to the two methods, because we calculated NIC using two methods. Because of that, it will have an impact on your impairment. So because fair value and proportionate method, okay? For that, just see how they have answered it. They have answered it in different paragraphs, not together. For fair value, they have a separate paragraph. For the proportionate method, they have a separate paragraph. So this is the order we have to follow. So let us start with the fair value first. Okay. What is it? First, you are writing the sentence, then as a summary, you are showing the calculations. Okay. Basically, you are writing what you are doing. That's it. So the overall impairment of Colosan is how much? What is the overall impairment? This you need to write under this method. So this shows that you need the answer of part A to do part B. This is the reason I tell you that follow the sequence to be on the safe side. First do part A, then B and C. That I have repeated that even in my first video, first part of this, that you have a choice. Yes, sometimes it's not related, sometimes it's unrelated. In that case, you can do in any order, but when calculations are involved, it's better that you follow it in that order. Okay, because for here, if you have to do this question, you need this goodwill, and this goodwill was calculated in second part of A. Okay, and I have showed how we have got the goodwill 24 million in the first part of this video. So go and check how we got 24 million. Okay, I'm not going to repeat it here. It is in the first part of this video. So the overall impairment is 30 million. How? Because 106% net asset. Then we added the goodwill minus 100, the recoverable amount. Okay, the goodwill between the two method is different. That's why we are doing this. Okay, the goodwill under fair value is 24 million. Okay, if you don't remember, you can see this 24 million. That's the goodwill. Okay, because you have to allocate first against goodwill. So you need this goodwill also from here. This goodwill was not there. If you see the this one, intangibles other than goodwill, so there is no goodwill here. In this net asset, goodwill was not included. That's why you have to add their goodwill also, because you are going to allocate the impairment against goodwill and then other assets. So that's why you are adding that 24 with 106 and minus the recoverable amount to get the impairment. Okay, which is 30 million is the impairment. You see, when they're told that the impairment is 30 million, they just didn't say 30 million. They showed a working over here. You see, this is how you need to answer. When you're giving an answer, you don't have to show separate working, because this is just something which can be shown in one line. Just put a bracket and show it. Next to the answer, put a bracket and show that this is how you have obtained the 30 million. Okay. This does not require separate working. Separate working is required where there are so many stages, plenty. The calculation is very big. Plenty of workings are required. There you have to do separate working. Here it's not required. Here it's just this one line. You add 106 with 124 and minus 100. That's it. Next paragraph. Okay. The damaged building should be impaired by 4. You have to talk about the damaged building. There was a damaged building we talked about in the case study when we were reading. Okay, which was for 4 million. So the damaged building should be impaired by 4 million. This is what I'm telling, how you utilize a case study in fully. You read it, something has been given, some figure has been given, always there is a use for that figure. You have to use it. If something in your case study, they have given you some numbers on something, definitely that will come somewhere. You have to use it somewhere. For example, like this damaged building impairment of 4 million. So don't just get so blind for that 30 million impairment and allocate it against the assets. No, there is a impairment for damaged building also. You have to think about that also, that 4 million with a corresponding charge to P&L. Okay, so the damaged building impairment will be with a corresponding charge to where? P&L. You have to say where it will go. Why? Because in the end, the requirements say show the effect on the consolidation. Consolidation account means what? Consolidated profit and loss and consolidated financial statements. So you have to show where this impairment will go. Impairment goes where? Impairment is a loss. It will go to P&L. It's an expense. Okay. So since 4 million has already been allocated to land and buildings, okay, you see out of this 30 million, the 4 million has already been allocated to Land and buildings, you have to write this. Okay, each word here is important, so I'm not going to repeat that this word has to be, this word has to be. Understand it. Every sentence is required and you need to write it. But understand how the sentence comes. Okay, you need to first understand the concept or meaning behind it. Then only it will, you can write it in any way you want. So the 4 million has been allocated to land and buildings. So out of 30, 4 million has been allocated, remaining 26 million of impairment loss remains to be allocated. You see, this you have to write. Very important. It's the second paragraph. Okay, how am I saying already land and buildings? If you see, if you go up, see here. Okay, so other land and buildings are held at recoverable amount. So this 4 million, okay, it's a building, right? So it's a building, so it's easy. You can easily allocate it. Nowhere it says that this 4 million has been allocated to land and buildings, but here you have to use common sense. Why? Because this it's land, it's land and building, no? Specifically land and building. So there is no point of allocating it to the other assets. So you can easily allocate it to the land and buildings because it's a building. Okay. But here this 100, okay, when they told needs to be allocated, that 30, why that 30 needs to be allocated like that? First against goodwill and then other assets. The reason is because it is not specific to which asset. They just told assets. That's it. That's why. But here it's clear. For land and building has been impaired. So land and building only you will allocate. Okay. Whenever you can allocate something against a specific, for example, like this land and building, first allocate against it. The remaining will go to, remaining will be allocated against the others. Okay. That's how it goes. Okay, when you study impairment, you will understand this. Next, third paragraph. The full 24 million of goodwill, okay, should be written off an expense in the consolidated. You have to talk about each line. This, okay, if you see the requirement, let me show you the requirement. Like, once again, I know it's a bit irritating that I'm going here and there, but it's important that because it's very common that by now you must have forgot the requirements. Every time you have to keep reading the requirements to see, are you missing out anything? Are you answering the everything required? So if you see the last, okay, they are not following this order. They're not following that. First, they have to talk about impairment, how it will be allocated. Then they are going to talk about the different methods. Then they are talking about how it will impact on the. No, they are, whenever they are talking about something, immediately they are showing how the impact will be on the consolidated financial statements immediately. Consolidated financial statements includes both balance sheet and income statement. Immediately they are showing. That's why they are writing this sentence to show the impact. Okay, so this is that sentence only. This is they're showing the impact on the consolidated. Okay, the word consolidated will tell you. You have to write it. So the full 24 million of goodwill. We have a goodwill also. So this should be written off an expense in the consolidated statement of profit or loss. Yes, definitely. Because we have a goodwill and we told that impairment first will be allocated against goodwill. So out of this 26 million of impairment, 24 will go to goodwill. The remaining 2 will be allocated to other assets. You see, that is what the next paragraph talks about. And it will be written off and expensed. When you are allocating against something, expensed. Where? Statement of profit or loss. Consolidated statement of profit or loss, not just statement of profit or loss. If you just write statement of profit or loss, you'll be wrong. You have to write consolidated statement of profit or loss. Fourth paragraph. And if you see, each sentences are divided into different paragraphs. Okay, so write it in different paragraphs. How they have divided in 4 different paragraphs? It's simple. First paragraph. Okay, 1, 2, 3, 4. First paragraph. If you see the sentence, the length is not similar. Don't expect you are writing 5 lines, 5 lines, 5 lines. No, it's not similar. It depends on the amount you have to write. For some, 1 line is enough. For some, you might have to explain more, 4 or 5 lines, like the last paragraph. So the first paragraph, if you see, they just talked about, they calculated the overall impairment. That is 30 million. That's it. Second paragraph, they talked about the damaged building, how it will be allocated. Third paragraph, they talked about that it will be allocated against goodwill. Last paragraph they talked about that it will be allocated against other assets. How? Proportionate. They have shown the proportionate and everything. You see? So every line carefully they have divided. They have thought about it. This comes with practice, and you need to plan also a lot in advance how you are going to divide it in different paragraphs. Okay. So now they're talking of the remaining 2 million. Of the remaining 2 million impairment, because out of 26, 24 has been allocated against goodwill. So remaining is 2. So how this 2 will be allocated in impairment, we have to proportionate, remember, according to the carrying value, not just 2 million against this, no. So 30 minus 4 minus 24. They have shown how they have got this 2 million here. It's better that you show it, even if you know that is 26 minus 24 is 2, but show it here. Okay, 30 minus 4 minus 24. It's the same thing only, 26 minus 24. So now, this 2 million, out of this 2 million, 1.25 million will be allocated to plant and machinery, 0.75 will be allocated to the remaining intangibles. How are they showing? They are showing a working also. They are showing you the working also, how they got this 1.25 and 0.75. So for plant and machinery, what is the impairment? It is 2 million. But they told according to the carrying value of the asset, okay? So it will be 15 plus 9. How they got this? 15, 50. Let us go there. You need to go there. Okay. So out of this, if you see, 60, 15, 19, 22. This is out because you have already allocated the 4 million. So you cannot take land and buildings. Plant and machinery, yes. Intangibles other than goodwill, yes. Current assets at recoverable amount. So you cannot take recoverable amount. So only 15 and 9. That's why you have added 15 and 9 in the denominator. Out of 15 and 9, 15 plus 9, out of that 15 is for plant and machinery. And 9 is for intangibles. Okay, that's how you are allocating it. Okay, if you see here again, so it is 15 over the total, and here it is 9 over the total for intangibles. Okay, multiply it by 2 because 2 is the impairment, remaining impairment. So out of this 2 divided, okay, this 2 it's like this 1.25 and 0.75. But to get this, you have to do this workings, okay? This workings is required to get the ratios. And you have to write what are you going to do with the current assets. If it was not with recoverable amount, but here it is with recoverable amount, so you don't have to deal with the current assets. Has no assets have been previously revalued. Very important. Why they told about this revaluation? If you see here, one thing they have told in the case study. Company does not have a policy of revaluing its assets. This is very important why they have given. I have told you nothing is not important that they have not given. No, everything is important. They talk about some statement, their policies, it's important. Policies is very important. So this will tell you where will your amount go, in which place. If there's a revaluation, it will go to some other place. If there's no revaluation, it will go to profit and loss. That's why they have given it. So if you see here, as no assets have been previously revalued, you see it has not been previously revalued. All the impairments are charged to P&L. Impairments are charged to P&L because of this reason. So now you have to write it that because there's no revaluation previously, all impairment will go which place? P&L, profit and loss account. Okay, next let us read the tutorial note before proceeding further. There is more to it. Okay, it is not just over with it, there is more, and this is the same paragraph only, the previous paragraph. So if the NIC has been measured at fair value at acquisition, then full goodwill has been calculated. Okay, NIC at fair value means full goodwill. There is NIC at fair value means full goodwill. Okay, you have to understand it. These are the same terms only. The goodwill attributable to the owners of the parent and the goodwill attributable to the NCI together. As such, NIC must be attributed its share of goodwill impairment charge. So for this, because it's together, whatever the goodwill you calculate, for this reason, NIC must be attributed. You have to now do an extra working here. Extra working is required. What is that extra working? You have to find out how much is for NCI, how much is the NCI share for the goodwill impairment. Because that goodwill, when you calculated that 24 million, you have allocated against it, that goodwill includes both NIC and the parents' goodwill. Because using fair value, and say at fair value means full goodwill method. So of the impairment loss, 24 million. What was your goodwill total? 24 million. Now out of it, 20% is NCI, 80% is for the parent. But 80% of what? Of the 30 million. Okay, why 30 million? Because 30 million was the total impairment. Okay, you have to take 80% of it. What is 30 million? Previously we have given here 30 million. You see, overall impairment. Okay, so the overall impairment from that 30, we are taking 80%. That is 24 is for the parent. Okay, you have to write it. 24 will be attributable to the owners of the Luploid company and 6 million, that is 20% of 30 again, to the NCI. In the consolidated statement of profit or loss, this is the reason you have to show the impairment impact on the consolidated financial statements. Okay, because whatever the impairment goes to the NCI or the parent will be there in the consolidated statement of profit or loss as separately. That's why you have to separate it out. Now finally, this is the final table after you do all your calculation. Okay, so let's just see how they have presented it. This makes your work very neat, very easy to compare, and easier. You are making life easier for the examiner actually to give you marks. So the allocation of the impairment is summarized in this table. You see, everything is summarized. Make a habit of summarizing things like this when too much of things are going on. Okay. So this is the original, this is the impairment, and this is the revised. Okay. So original is this. Original is as it is given to you. As it is given to you in the this thing, the only thing you added in the original is goodwill. Goodwill was not there before. This you have added. That's it. Because before it was 106, if you see. Before that 24, it was 106. Now it's 130. So only that change, everything else remains the same. Impairment. So impairment 4. Impairment will be in bracket. Okay. Out of 60, you are taking 4 out. Because land and buildings impairment. Then we calculated this 1.05 and 2. 0.25 and 24. Fully you can take from the goodwill. So you are remaining with 30. Okay. Impairment. So from 130, if 30 goes, 100 only. This is the recoverable amount, right? Isn't it the recoverable amount? Recoverable one has to be 100. From both the side, okay? From this side also 130 minus 30, and from this side also. From down also, from across also, it has to be 100. If it's not 100, something is wrong. It cannot be less than 100 because we told a statement that it cannot exit. It cannot go below the recoverable amount. Okay? We told it. So land and buildings, 60 minus 44 is 56. 15. Okay, you just deduct the impairment from the original CA and you get the revised CA. That's it. So it's 100. Now let us go to the second method. Now we can go a bit faster because it is similar like the fair value how you have written. The steps, everything is similar. The only thing is some rules will change here because it's proportional method, and some calculation will change. The numbers will change. The rest all it follows in the same. The consistency is there. The way that one is presented, fair value answered, this one is also answered in a similar way. So if you see here, the basic principles, if something is same as something as previously, if some two methods are similar, write it so that this avoids the duplication of writing two things, the same thing twice. Okay, don't do it. When there are two things you have to repeat, don't repeat it. Just say whatever is here, it is similar for that one or same as that one, like how they have written here. So the basic principle and the rule for impairment is the same as the fair value and fair value method And so the 4 million will again first be written off against the land and buildings, you see. So this 4 million, I'm sorry. So this 4 million will go against land and building only. How it has gone for the fair value method. Okay, you need to mention of this. You have to make a note of it. Now, second paragraph, when NCI is measured using proportional share of net assets, no goodwill attributable to the NCI is recognized. This is very important. When it is a proportionate method. Why? It is fully for the parent company. Okay, so no goodwill attributable to the NSI is recognized. Extra working is required here. This means that the goodwill needs to be grossed up when an impairment review is performed so that it is comparable with the recoverable amount. You see, goodwill needs to be grossed up to compare with the recoverable amount. You have to write this. When it's a proportionate method only, this is for proportionate method. You have to gross up the goodwill. Then only you can compare with the recoverable amount. Okay. So now let us do that. So the goodwill was 19.16 million. Okay, and the proportionate method, if you see. Okay, in case you forgot, I will take you up and show you. Just see. It was 19.6 million. So goodwill is 19.6 million is grossed up. How do you gross up? Remember this, okay? Memorize it or by heart it or do whatever it. But you have to remember it. It's a fact and it's always same. Okay? But this percentages will change depending on what is the percentage of NCI and how much they have acquired. Okay? But when you are grossing up the goodwill, 100 divided by 80. Multiplied by 100 divided by 80. Okay? You have to multiply 19.6 by 100. Always multiply by 100, but this percentage will change. Okay, here they have acquired 80%, that's why you are dividing it by 80. If they have acquired it for 70%, it will be divided by 70, but multiplication is always by 100. It is not 80 over 100 into 12.6. Why? Because when you're grossing up, if you are taking 80%, that means you are taking 80% of 19.6. Is it grossing up? It's not called grossing up. You are taking 80% of 19.6. No, you have to gross it up. So multiply by 100, divide by 80. Because you have acquired 80%. That's why you're taking divide by 80. Okay. This 19.6 is the netted amount. So when you want to gross it back, netted amount means out of 80. 80 is the denominator. You want to see how much. For example, let us take like this. If you're not understanding this method of grossing up, 19.6. Okay, it's a netted amount. Netted amount means what? Out of 80 it is. Okay, it is out of 80, but when you want to gross it up, you want to see in terms of 100 how much it will be. So multiplied by 100 when you're grossing it up. Okay, always when you're grossing it up, multiplication is by 100, division it changes. Here it is 80 because you have acquired 80%. Okay, so remember this and you will never go wrong. Okay, 100 by 80. So this will be the value which you will get. Definitely when you gross up something, it has to be higher than 19.6. Okay, if it was other way around, if you're taking 80 over 100 multiply by 19.6, okay, just use your common sense. You don't have to memorize something. You definitely will get a figure less than 19.6. So how can it be called as a grossed up figure? No, gross up has to be something higher than 19.6. No, so this is 24.5 million. That's a grossed up figure. Okay, so just take the difference between two. So this extra 4.9 extra means the difference between 19.6 and 24.5. The gross and the netted amount is known as notional goodwill. Everything is from the standard only I'm talking. Okay, even in the textbook also you will see the similar languages. They will say that this extra is known as notional goodwill. So the overall impairment is now what is the overall impairment? Net asset before was 106. You are taking goodwill. Now don't take 19.6. You have to take 24.5 minus recoverable 100. So this is your now the new impairment. And out of this 4 million has already been allocated to land and buildings. So 4.4. So out of 30.5, 4 goes. What remains is 26.5 million. So this will be allocated. How? They have showed here also how they have got this 26.5 million. Okay. Wherever you have to show it. How you got 26.5. Don't just write 26.5. Put a bracket and write 30.5 minus 4. So remaining impairment exists the total notional goodwill. It exists the total notional goodwill if you see. What is the total notional goodwill? It was notional goodwill is 4.9, right? So this is written down to 0. Why written down to 0? You cannot write down something below 0. It's a rule. You have to write it down until 0. No, you cannot exceed more than 0. It cannot become negative. Because here the notional goodwill, the impairment exists the notional goodwill. No? So definitely when impairment is there, it cannot be that goodwill is 4.9 and 4.9 minus 26.5 and it becomes negative. No, it has to be reduced up to 0. That's it. Because your impairment is more than the goodwill. So it is written down to 0. This also you need to write that it has to be written down to 0. However, as only 19.6 million goodwill is recognized within the consolidated accounts. Okay, make sure that you write it. Where is goodwill recognized? Consolidated accounts. 19.6 million is only recognized. So the impairment attributable to the notional goodwill is not recognized. Notional goodwill means that extra 4.9. Only 19.6 is recognized. No, that 4.9 is not recognized. This grossing up. We only grossed it up and found the new impairment, but it was not recognized in the consolidated accounts. Okay. So the impairment attributable to the notional goodwill is not recognized. You have to talk about it. You have to write it. So the impairment charge in the consolidated statement of profit or loss is therefore 19.6 million. Only 19.6 million, not this 24.5 million. Where? In the consolidated statement of profit or loss, the impairment which is charged. And this is fully attributable to whom? Owners. Owners of the company. Don't just say owners. Mention owners of which company. In your case study, it is the Luploid. Okay? Luploid or Luploid, however you want to pronounce it. This shows that you're linking it to the case study. Next. Here also same. Calculation is same because remaining is 2 million. How remaining is 2 million? Here they have shown you. 30.5. Your new net current assets minus. Okay. Minus 4 which has been allocated to land and buildings minus 24.5. Here you are not taking 19.6 by the way. Here you are taking 24.5. Okay. The gross staff figure. You are only taking 19.6 where in the consolidated statement of profit or loss. When you are showing the impact on the consolidated accounts, then only you are talking about 19.6. Okay, please understand it. Don't get confused that here we talked about 19.6 we are recognizing, then why are we taking 24.5 million again? Okay, so since this is 2 million as same like the fair value, so the calculations amount will be same. Okay, even the workings are same, so I don't have to repeat it. And again this statement has to be written that because no revaluation is there, everything will go to P&L, all impairments. So now let us read the tutorial note. Always keep the consistency of your answer. If you see for one method you're following a way of answering, for the second method also do it same way. Like here if you see, even in the proportional method they have shown this, how they have done for the fair value. The original CA, impairment and revise here. Okay, but before going to that, let us read the tutorial note. If goodwill is calculated using proportionate method, then goodwill impairment recognized in consolidated financial statement is all attributable to the owners of the parent company. This you have to understand. When proportionate, whatever is in the consolidated financial statements, okay, the goodwill impairment will go to parent only. So however, any impairment loss related to other assets must be allocated between the owners of the parent and the NCI. Okay, that's why we have taken grossed up figure, because when we are allocating it to the other assets, it must be allocated between the owners and the NCI. That's why we have grossed it up. Okay, so now you have to take the percentages of the parent and the NCI, by the way. Okay, so the impairment, same how we did for fair value, we took here also we have to take. So the impairment expense attributable to the owners of the Luploid is 24.4 million. They have showed how they have got 24.4 million. How how did they get 19.6 million, the goodwill impairment? Okay, this is only for the parent, but you have to take the total. No, out of the total only you can take. So 19.6 goodwill impairment plus 80%, because for the parent is 80% into 4 plus 2. Okay, 4 million will go to buildings of the impairment, 2 million will go to plant and machinery and other intangibles. So add both 4 and 2, which is 6. Out of that take 80% and add it with 19.6, which is 24.4. So the impairment expense attributable to the NCI is 1.2. How 1.2? Because 4 and 2 is 6 million. Out of this just take 20%, which is 1.2 million. Okay. And by the way, if you are not understanding any of my explanations or got confused somewhere, stuck somewhere, you are feel free to contact me. You can contact me through my Gmail, or you can comment me on my page or on my channel below, and I will be replying you in a day or two. So here also, if you take same like fair value, original everything is same. The what extra is goodwill will change 19.6 and notional goodwill. Okay. Okay. Notional goodwill we have calculated, and goodwill is already being given to you. So 135.5. Next, you are deducting 4 from the buildings, 1.25 and 0.75 and 19.6 wholly you are taking from the goodwill, and notional goodwill also you are reducing it fully, 30.5. So after you reduce everything, it's 100. You see, it has to be equal to the recoverable amount. It cannot fall below recoverable amount. Okay, and one thing, before I go to part C, I want to show you something which will save a lot of your time and effort. Just see fair value, how they have started. Here they have introduced you that how fair value will be. Sorry, before going to fair value, the impairment. They have told that this is the carrying amount, excess will recover amount, all those things is not required. That first it will be allocated according to goodwill, then other assets. This thing is not repeated again. It's only once. You're not repeating it for the fair value, and you're not writing it again for the proportional method. It's only written once. That's it. It is understood. Okay. So now, before I even go to part C, we are over with part B. We have finished. So I hope with this you have got a clear explanation of how it works. The nature of this question is same. It works for everything. Only the figures might change here and there. Before that, I want to take you through the marking scheme, and also the this thing, the examiner's comment. So if you see, yesterday, by the way, for goodwill, when I calculated, it was for 3 marks. I didn't show you second part of it, how you're getting the 3 marks. 1 mark is for correct fair value of net assets, because we have to calculate it, and correct NCI figure, 2 marks. Okay. Next, we have done part B. So discussion of what constitutes, sorry, discussion of, okay, how you are getting the 11 marks. Please see the breakdown. Discussion of what constitutes in CGUs. What is CGU? Cash generating unit. Okay, the short form for CGU is cash generating unit. Okay, what constitutes an impairment? You have to write, you have to discuss how an impairment occurs and what is CGU. Remember in the first paragraph we talked that if recoverable amount is less than net assets, carrying value of assets, impairment is there. Then what is cash generating unit? We have given the definition. Everything is 2 marks. 2 marks for it. Next, correct calculation of impairment losses for both methods. For both methods, okay? That means one method 1 mark, other method another mark. That's how you're getting 2 marks. To get the 2 marks, you have to do a lot of working. This is why it's not easy to score marks in ACCA, because you might think it's just 1 mark, so 1 line is enough. No, so many working is required to get that 1 mark. That means you have to be correct in every step. So correct calculation of impairment losses. Notional goodwill. You see, notional goodwill. So how will you know that you have to calculate notional goodwill? If you're not thorough with your standard, the impairment IS 36. This is why you have to study IS 36, the goodwill impairment under both methods, okay? So notional goodwill 1 mark. Impairment allocation. How are you going to allocate that goodwill? First against land and buildings, then against goodwill, then that proportionate, okay, between plant and machinery and the intangibles other than goodwill. So for that 3 marks. And discussion of how and why the methods differ. How and why the methods differ, because one is for the parent, one is for the parent and the NCI. So all those things you're writing and getting 3 marks. So this is how you're getting the 11 marks. Be very strict with it. Please don't take it very lightly. Follow it very strictly. Okay? The marking scheme especially. Now I'm going to take you to the marking scheme. So the examiner's comment. What they say about it. So yesterday I finished and I was here. Okay, we'll start from here. So for part B, and most of the answers allocated an appropriate amount of their answer to this part. Whilst among almost all answers describe the basic impairment process, a surprising number of candidates excluded goodwill from the impairment calculation. You see, basic impairment process, most of you were able to do it, but where students surprised was that they excluded goodwill from the impairment. They didn't take the goodwill in the impairment itself. So that means you are not prepared enough for the impairment part. Goodwill and impairment comes together. Okay, because when impairment is there, you have to allocate against where? Goodwill. So for that, your goodwill has to be correct. So this may have limited their opportunities for marks. You see, this is how you're losing marks if you're not taking one thing in the consideration, particularly where their explanations did not explain the process by which an impairment loss is allocated to assets of cash generating unit. Okay, so your explanation itself did not explain how it will be allocated against what. If you see the answer, what I went through, very clearly they have showed step by step. First again land and buildings, then against goodwill they have allocated, then how they have allocated again the intangibles and the plant and machinery. They have done the working and got the amount. So most of you were not able to explain that process. Okay, please understand that it's not important at this stage in SBR. It's not enough for you to get the answers correct, the numbers correct. If you're not able to explain it in words, you will fail. For no doubt, okay, without a doubt, you will fail this paper. You have to be very strong in your answering part as well to score the marks, because more marks are for discussion than your calculations. Because this is not a number crunching paper, okay, where you crunch some numbers, put some numbers and get it correct. Okay. So please understand the importance of it. That's why I'm always emphasizing, I'm talking more and more on discussion part, because what I've seen from the students is that they have been failing because of this part only. They ignore the importance of discussion. Okay, so let us not be in that category, and let us improve and let us learn from our past mistakes. Okay, next. Very few candidates explain the need for grossing up goodwill. Okay, you didn't even explain the need. It's not enough that you just gross up goodwill. No, 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 no. You have to explain the process why you are grossing up the goodwill. Why you're grossing up the goodwill? Because it only has the parents part. You have saw in the answer how they have written. So you can take from the answer how they are writing. If you have confusion how to write. Okay, so explain the need for grossing up the goodwill. Candidates ignored it. Very few explained. Under the net assets NCI valuation method. Okay, this means under the second method, the proportionate method. At least you have to explain this. So how this is then allocated? Then how this is allocated between the group and the NCI? That also ignored. Explanations of how the impairment losses are proportionate between the group and the NCI were generally quite basic. It's quite basic. What does it mean? Quite basic means you're not relating it to the case study. It's very basically you are saying, okay, this is the percentage of parent, this is the percentage of NCI. That's it. So indeed, most candidates identify that there is no goodwill attributable to the NCI under the proportionate net assets valuation. See, most candidates, that's a good sign that they have identified that no goodwill will be going for the NCI under the proportionate method. But then suggested none of the impairment need to be approved. But this is the mistake that you should not do. Even if there's no goodwill attributable to an NCI under the second method, they also suggested because of that none of the impairment, that means no impairment will be proportionate to NCI, which is wrong. You have to apportion the impairment to the NCI. Okay. So next is for part C. Part C we haven't done yet. We'll be going through it. Okay. Let us do that as well. And it's small. Okay, the standard is small and it's not always, it does not come, but it's better that I never say don't omit any standard. I always say even the smallest and the smallest standard. Okay, whatever looks not so important to you. Okay, please go through it. Okay, please go through it. I think around there, if you take all the IAS and all the IFRS, total I think around 46 or 48, 46, 47, 48, around that range. There will be total amount is that total IAS and IFRS. The total amount will be around I think 48. I don't remember so well now, but I think it's around 48 because when I was studying, I made sure that I went through all those 48 and I studied all those 48 very thoroughly. You ask me anything from any standard now, I think I'll be able to answer it. Right? Because I have been very thoroughly, I have gone through those standards, each standard. I used to take a day out for studying 1 or 2 standards per day. Okay. So make sure that when you're studying in your study schedule, put it in such a way that you are studying one standard very properly before jumping. Okay. It's no use that you are knowing all the standards, little from here, little from there. No. Know something, but know it very completely and fully. This will secure a lot of marks for you. But it's not that don't limit it just that you know 1 or 2 standards very well and you don't know about the other standards. Don't be that also. You have to know about all the standards. But the major standards which always comes like IFRS 15, then the goodwill, the impairment, then intangible assets, then your provisions, this standards you have to know in and out. Other than that, some standards like SME or share-based payment or some standards which does not come most of the time, those are small, but at least you can make at least 80% make an effort to know at least 80% of it. Okay. You have to be smart enough of how you're going to study the standards and how much you want to know. But I always say it's better to go through all the standards. Don't ignore anything. Okay. Because imagine if you have ignored one complete standard and only that standard comes in the exam, then you will, you have nowhere to go. You have nowhere to escape. So don't do that. Because if you take seriously and actually take a day or two, go through all the standards, then SBR will be one of the easiest paper. Trust me on this when I'm saying this because I have went through all the professional papers, so I know by the look of it, I know which paper a students will be able to, handle and which paper is very tough and something which is, so I know it through experience. So I'm able to tell you that SBR is one of the easiest paper to score marks. Trust me when I'm saying this. Okay, easiest paper to score marks, so you don't have to worry too much about it. It is one of, like I would say, in the professional paper, most of the students try SBR. In fact, that's the first paper they attempt. Okay, easiest papers I have found in SBR in the P levels. In fact, it was one of my first paper also. I have started with SBR. Okay. So now without wasting so much of time, let us go to part C. What was part C about? It was IFRS 2, share-based payment. Yesterday we went through this, so now I'm going to read the remaining section of it. Okay. Luploid acquired 60% of the 10 million equity shares of Hammond on 1st of July 2007. 60%, 10 million, 1st of July. Date is very important. How much they have acquired and million equity shares. 2 Leopard shares are to be issued for every 5 shares acquired in Hammond. 2 for every 5. The shares will be issued on 1st of July 2008 after 1 year. So the fair value is important on this date. Okay. Hammond had previously granted a share-based payment to its employees and with a 3-year vesting period. What is 3-year vesting period? At 1st of July 2007, the employees had completed their service period but has not yet exercised their options. So the fair value of the option granted on 1st of July was 15 million. As a part of the accusation, Luploid is obliged to replace the share-based payment scheme of Hammond with a scheme that has a fair value of 18 million on 1st of July. There are no vesting conditions attached to this replacement scheme. So the replacement scheme, there is no vesting conditions, unlike the first one where there were 3-year vesting period. Okay. So because of the accusation, they have replaced the share-based payment, okay, with another scheme which has a fair value of 18 million. Please understand the scenario well. No vesting conditions. Next. Unrelated to the accusation of Hammond, Luploid issued 100 options to 10,000 employees on 1st of July. Unrelated to the accusation, okay? The moment they say unrelated to accusation, you don't have to talk about the accusation. Part A and B is not important. Luploid issued 100 options to 10,000 employees on 1st of July 2007. The shares are conditional on the employees completing a further 2 years of service. You see, it is further 2 years of service employees have to complete. The shares are conditional means they will get those shares when they have completed the 2 years of service. They are in the business for 2 years. Okay. Next. So additionally, the scheme required that the market price of the Luploid share had to increase by 10% from its value of 30 per share at the accusation date over the vesting period. Okay. So had to increase by 10 from its value of 30 per share. This is what the scheme required. It was anticipated by 1st of July that 10% of the staff would have leave over the vesting period, but it was revised to 4% by 30th June 2008. 1st of July, 10% of staff would leave and was revised to 4% by 30th June 2008. That is after a year. The fair value of each option at the grant date was, so the fair value of each option was, the grant date was 20. The share price of the Luploid was at this much, 32, and it's anticipated to grow at a similar rate in the year and 30. So it will grow at a similar rate in the next year. Okay. So now the requirement asked you, there are 2 parts to this for 4 and 5 marks. Let us first handle the 4 marks. How the consideration for the accusation of Hammond should be measured on 1st of July 2007. Okay, you have to measure the consideration, that means the purchase price. When you are acquiring, you have to calculate that. Not only that, it should include a discussion also why only some of the cost of replacement share base should be included within the consideration. Okay, when you are remember the replacement scheme, when you are taking, you have replaced that scheme, share based payment scheme. So when you are replacing it, only some cost of it you are taking in the consideration. Why is it? That also you have to explain. 4 marks. So let us go through the answer. Consideration. Okay, always keep a subheading to your answer. Always. Okay, so when you're talking about consideration, which standard are you talking about? You need to mention a standard. You just cannot say a consideration will be like this. Everything has a standard behind it, explaining you that in this standard you have to calculate it this way. It is IFRS 3. It is IFRS 3. What is IFRS 3 about? IFRS 3 is your business combination. Okay, it talks about your consideration. So whenever you have to measure a consideration on accusation, you have to mention IFRS 3 is a business combination. This standard talks about consideration. Okay, how to calculate and all. So I would like to keep a 1 minute of silence because Azan is going on in my part of the country, so I'll be silent. I'll resume after a minute. Okay, so no. Okay, let us resume back. So we have to talk about business combination because this standard talks about the consideration. So it requires all consideration to be measured at fair value on the acquisition for the subsidiary. Okay, how all consideration are measured at fair value on acquisition of a subsidiary when you acquire a subsidiary. Okay, just wait a minute to see something. Yes. So this is what I wanted to show you. They have acquired 60%. The reason why they have told they have acquired 60%, this will tell you that this is a subsidiary. Okay, more than 50% subsidiary. So measured at fair value on the acquisition of a subsidiary. Cool. Next, deferred shares. You have to talk about deferred shares. Remember, three, four, I think how many shares? 1 for 5 shares or 3 for 5 shares, something like that was there, or 2 for 5 shares. Some ratio was given there. So deferred shares should be measured at a fair value. How it should be measured at fair value? At the acquisition date. Everything is at acquisition date. With subsequent changes in fair value ignored. This we have to talk about. This is from all IFRS 3 only, okay? If you're not understanding an answer, please go to IFRS 3, read it, and then come back. You will understand this better. Okay? Here they told IFRS 3 that fair value you have to take at the acquisition date. And we know that fair value keeps changing year by year. Every year, if you see that fair value changed, but you have to ignore those changes. Only on the acquisition date, whatever the fair value is, you have to take that fair value. That's why they told with subsequent changes in fair value ignored. So now you have to see how many shares they are going to issue as a consideration. You have to calculate that because consideration is not only in cash. Consideration could be in terms of deferred shares. It could be share for share. There are so many ways of giving consideration. Please go to IFRS 3 and see what are the ways of giving consideration. Okay, so you have to calculate. This is not cash. Okay, that's why you have to calculate the shares, issue shares. How much the company is going to issue? 2.4 million shares as consideration. How do you know it's 2.4 million? Calculation is here, right next to it. Right next to it. Make a habit of presenting your answer like this. When you're giving the answer 2.4 million, right next to it, your working has to be there. Okay, you have acquired how much? 60% into 10 million into 2.2 over 5. Why 2 over 5? Okay, let us see. How much they have acquired? 60% of 10 million. Okay, that's why they are taking 60% of 10 million into 2 over 5. What 2 over 5? 2 of Luploid shares issued for every 5 share. For every 5 share, 2 of Luploid share. That's why divided by 5 into 2 or 2 over 5. Okay, so that fraction is 2 into 5, 2 over 5, because 2 for every 5 shares. Okay, another way. Okay, let me make this easier for you. Most of you struggle on this fraction part whenever they have given ratios like this: 2 is to 5, 5 is to 3. Okay, so whenever they have given 2 is to 5 or 2 shares for every 5 shares held, so whatever the amount of shares held, comes in the denominator. For example, here it is 5. Okay, 2 shares for every 5 shares held. So 2 over 5. It was, if it was 2 shares for every 3 shares held, then it will be 2 divided by 3. So you see, this is how you decide on the fraction. Okay. Next, the market price at the date of the acquisition. What was the market price at the date of the acquisition? Was 30. 30 was the market price. So the total fair value will be how much? 2.4 into 30. 2.5 million shares into 30, because 30 was the market price at acquisition. We'll see. So that you don't get confused. There are so many market prices which were given there. Okay. If you see, it was 30. Okay. It is this one. The fair value of their shares. This you're not taking part of anything of Hammond yet. Okay. This is only for the Luploid shares. Fair value you are taking 30. So once you have taken it, next comes, okay, since Luploid is obliged to replace the share-based scheme, now you have to talk. This is before replacing the share, by the way. That's why don't get confused. There are so many fair values of shares which are given. Okay, so that's why I showed you to tell you that don't get confused. This is before replacing. Now you have to take after replacing. Okay, so since Luploid is obliged to replace the share-based scheme of Hammond on acquisition, the replacement scheme should also be included as consideration, but only up to the fair value of the original scheme as at 31st, as at 1st July 2007. Because they are obliged, okay, obliged for the replacing of the share based scheme. So what does it say? You have to take that also in the consideration when you're taking the consideration amount. Okay, but not everything. From there, what are you taking? Only up to the fair value of the original scheme which has been replaced. Okay, there's a rule for it, that when you're changing the contract or something, modifying your contract, how are you taking the consideration price and all. Okay, it's a rule. So that rule only they are following here under IFRS 2, but only up to the fair value of the original scheme as at 1st of July 2007. Okay, so the fair value of the replacement shares at the grant date was how much? 18 million. Fair value of the replacement share at the grant date, you have to take at the grant date only, that is 1st of July 2007. Okay, I'll see. The reason I'm taking you in and on out is the reason for you not to get confused. There are so many fair values, if you see, that you can get confused. Okay, if you see, they have told the fair value of the option granted at 15 million. This option is not needed. Okay, we are talking about the replacement scheme. Okay, so as part of the acquisition, they are obliged to replace the share based scheme, and the scheme had a fair value of 18 million on 1st of July. This you already have to take. Okay, not this 15 million. This 15 million does not come there. Let us see what they have wrote about that 15 million. However, the fair value of the original Hammond scheme at the acquisition was only 15 million. As such, only 15 million should be added to the consideration. I'm so sorry. That was before the consideration date, right? It was at the acquisition date. Okay, if it was after, then it would have not been taken. But since I forgot about the acquisition, see, this is why date is very important. You have to say at which date. This is at the acquisition date. Okay. So since it is at the acquisition date, fair value of the original scheme at the acquisition date was only 15 million. As such, only 15 million should be added to the consideration. So the total consideration should be valued as how much? 72 plus 15. The 72 you got from this. You're taking the shares and you are taking this 15 million you are adding. Okay. So here you are taking 15 because this was the fair value of the original scheme at the acquisition date. Okay, that's what they have told here. But only up to the fair value of the original scheme as at 1st of July 2007 you can take. Right? Yes, it is true that you can take the replacement scheme. See, I have misunderstood it. Sorry. I'm sorry, I have misunderstood it. It's not the replacement scheme fair value you have to take. They have told, yes, since you are obliged to replace the share based scheme, you have to take that in the consideration, the replacement scheme, but only up to the fair value of the original scheme, of the original scheme. Okay, the fair value of that on that acquisition. That's why you're taking 15 million, not 18 million. Okay, and so that 15 million you are adding with 72 million, which is the number of share value which you have taken. Okay, the shares and that one, adding it, so the total consideration is 87 million. Okay, now let us go to the second requirement before I go to the marking scheme and the examiner's comment. Let us go through the requirement again in case you forgot. Okay, it's always a good idea, always a good thing. Okay, wise that you always keep on checking the requirements whether I've answered or not. Okay, because it's very easy that you will forget. There's no doubt about it. So next is for 5 marks. How much of the expense they should be recognized in the consolidated estimate of profit or loss for the year ended 30th June 2008? Because share-based payment, whatever you do, it's a expense is there, right? It is an expense only from the company's side. So expense, where will it be recorded? In the statement of profit or loss, in the consolidated estimate of profit or loss, right? For the year ended, you have to how much? Okay, and a brief discussion has to be there of the relevant principles and how the vesting conditions can have an impact upon the calculations. And altogether is for 5 marks. So let us see how to attempt this type of question. So now it is the expense relating to the, you see, they have given a subheading relating to the replacement scheme. So the replacement scheme was 18, but the fair value of the original scheme was 15, so 3 million not included within the consideration. So this 3 million was not included within the consideration. You see, it is relating from the first one to the second one. You have to link. There is always a link from to your previous answer. It is not a complete standalone new question. No, 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 no. You have to make use of those numbers. Okay, so the 3 million was not included. We saw previously it was not included within the consideration. See above, this shows that it is linked. So it should be treated as what? Since it is not included, how should be treated? It should be treated as, you should write all this. Okay, it should be treated as part of the post acquisition remuneration package. Post acquisition, that means after the acquisition, it's as a remuneration package for the employees and measured in accordance with what? IFRS 2. IFRS 2 means share based payment. Whenever you're making the payment through shares, you can also make your payment through shares. It's not that you're giving your employees always in cash only. You can give them benefit, company cars and all, or shares, or so many ways. Like we have seen share option schemes and all. Okay, as there are no further vesting conditions, you see there are no further vesting conditions, they told, when it's replaced. We saw in the case study, it should be recognized as a post acquisition expense immediately as an expense, post acquisition. Okay, expense, because there's no vesting conditions. Okay, now let us read the tutorial note. When dealing with share based payment questions, students tend to provide answers that are wholly numerical. You see, Here itself they are showing you don't do the mistake. Make sure that you discuss also and apply the principles from IFRS 2 or you will miss out on some very easy marks. IFRS 2 always have discussion part also and calculation part also. Okay. So now it has been divided into 3 paragraphs. So the condition relating to the share price of Luploid is a market-based vesting condition. First, you have to understand what type of vesting condition it is. There are many types of it. One is performance-based, one is market-based. I think the third one I kind of forgot, but I think there were 3 or 4 types of vesting conditions. This one, condition relating to the share price. They told the share price has to increase. So the share price is what? Is it in your hand? Is it in your control? Is it in your performance? The share price will increase or no? It is something which is market based. Market will decide the share price. Okay. Even if you go on to IFRS 2, it says the same thing. So the condition relating to the share price of Luploid is a market based vesting condition. This you have to write. Okay. Then next, these are adjusted for in the calculation of the fair value of the grant date of the option. Yes. Adjusted. An expense is therefore recorded in the, where is an expense recorded? In the consolidated profit or loss of the Luploid, right? The parent company. Correct, right? Expense will go to P&L only, consolidated P&L of the parent company. And a corresponding credit. So if an expense is a debit, okay? If a debit is there, we know that a credit entry has to be there. What is the corresponding credit entry? Where will it go? To equity. Equity. Why equity? Share price, no? It has to do with shares only. So where will it go? Equity only. So corresponding credit is to equity, irrespective of whether the market-based vending condition is met or not. Very important is this. Maybe I will highlight it for you so that you never forget this. Even if you are met the market vesting conditions or not, what is it? Debit, expense, credit, equity. This is how it goes. There are some where you have to meet that condition, then only it will be given. But here it is market-based vesting conditions. Whether you meet it or not, it will be recorded like this only. Next. The additional 2-year service, they told 2-year service, okay, they told a 3-year service. Then why are they talking about additional 2-year service? Because from 2007 to 2008, 2007, 2008, okay. So additional 2-year service is a non-market based vesting conditions. This you have to understand that this is non-market. It is not a market-based vesting condition, the 2-year service. So the expense, because it is not a market-based conditions, it has to be adjusted. Remember that. So the expense and the credit to equity should be adjusted over the vesting period as expectations change regarding the non-market-based vesting conditions. You see expectation changes. First they told, I think 10% employees will leave. Then they told by 30th June 2008, 4% will leave. So expectation change, right? It's a non-market based condition and it changes. So because of that, you have to adjust also. The expense also and the credit to equity has to be adjusted over what? Vesting period. Now you're doing the calculation. If you see calculation is just one line, but so much of discussion is required, okay? So the correct charge to P&L and the credit to equity in the year. So correct charge to the profit or loss and the credit to equity the year ended 30th June, okay? Because they specifically told 30th June 2008 how much it is, okay? To understand this, okay, let us go through it. If you see here, how much it is? 100 options to 10,000 employees. To 10,000 employees. So you have to multiply 100 by 20 since it is 2 years. Okay, so 1/2. Okay, because you won for 30th June 2008. If you see here, they have given you the year also, 30th June 2008. I have underlined it also. Okay, and they have told that this was revised to 4% by 30th June 2008. What is revised to 4%? The staff will live by 4%. So if staff live by 4% means what is the remaining staff? Only the remaining staff will get the shares, right? The share option, which is 96%. Okay. And another thing is, what is the fair value? And fair value, when you take, you have to take the fair value at the grant date. Okay. Okay. So the fair value of each option at the grant date was 20. This is important. Only at the grant date you have to take. Okay. So now here, that's why you're taking 10,000, because 10,000 employees into 96, because 4% will leave. So remaining is 96. Out of it, 100, because 100 options, multiply by 20 because fair value of the option, grant date, fair value of the option, and 1 over 2 because it is over 2 years. Okay. On 30th June 2008 means out of the 2 years, 1 year. Okay. So 1 over 2. So it is 9.6 million. This 9.6 million will be debited in the P&L, credited to the equity. Okay. So now, if you see the marking scheme, part only for part C, how you're getting the 4 marks for the first part of C, calculation of the fair value, 1 mark, of deferred shares, calculation of the fair value of the option, another 1 mark, and discussion of the above calculations and application to the scenario. See, for applying it to the scenario and for the above calculations, 2 marks. Next, calculation of the share expense, only 1 mark. So application the following scenario, discussion of the scenario. Okay, calculation is 2 marks, vesting condition is 2 marks. Okay, so total 5 marks. Now let us go to the examiner's comment, and with this we shall be over. So part C required an explanation. The first part of C required an explanation of how consideration in the form of share, the second accusation, should be valued. Most answers correctly calculate the fair value of the share exchange. You see, most answers correctly calculated the fair value of the share exchange. That means students are good in this area. Second part asked for the resulting share-based expense and a discussion of the vesting conditions. Unfortunately, this was less well answered. You see, this was less well answered. That means you have to work on the expense part and the discussion also, because IFRS 2 mostly students neglect the discussion part and only focus on the calculation part. But you have to be very careful, students. If you are not understanding what you are doing, the method, okay, it's no use. Okay, even the calculation you will get confused, because you have to, before doing the calculation, first you have to understand that this is the reason I'm multiplying by this. This is the reason I'm taking it. So reason, automatically the reason comes out. Okay, so when you're calculating something means you know how to do it, so it's easy for you to write in words. That's what you have to do. Discussion means that only. So that's it. With this, I have end the question 1 here, and the next question will be question 2. If you see, the year also has been given. That means curve wise it is from the March June 2019. Okay, even this, I think question 1 is also from our past paper. Very recent past paper it is. This is September December 2019 paper. Okay, and since now you have got an idea by looking at part 1, and this is part 2 of question 1, now you have got an idea. This is a foundation I wanted to create. That's why it took so much of time. Now you have understood how a question looks like and how you have to answer. Remaining all the other questions from here onwards will be same. They'll be giving you the key answer tips, some tutorial notes will be there, then the marking scheme will be there, then the examiner's comment will be there. So we'll be going through them like this in the same way. You can comment me below if you want me to change some way, or you want me to explain something additional to it, or you don't want me to, you think I'm going too fast or too slow. Let me know it in the comments below, because I don't know from this side. From my side, I don't know what I'm doing, how you are understanding or perceiving me. That only you can do it. Okay, because I think I'm doing a good job. Well done, a job well done. But ultimately it's up to you. If you are not understanding, or if you are not delivering the results, it's ultimately my loss, right? It's more than you, it's my loss because I'm the one who's responsible for it. So let me know please in the comments also. You can know if you're not feeling okay to write it in comment. I am always open to take the criticism, okay? So you can even email me also. I'll be free to attend it, and I'll be open. Okay, I'll be honest with you, and I will be open to it. Okay, don't think if what happens if I feel bad and all. There's nothing like that because we all are humans. We make mistakes, and we always have to improve. So please do let me know because this is the new series I've started, and I want to know. I've got tremendous positive results when I did the same thing for AFM. So that's why I started for SBR also. Inshallah, I will be starting for other papers after I finish SBR. SBL is remaining, then tax is remaining, right? The other two are remaining, and also F level papers I'm not doing at the moment. I stopped, but because I'm focusing on the P level papers, right? And the good thing about this papers, what I'm uploading is on my channel is this. Anytime in the future, also if you're giving exam, you can apply it and you can utilize it. It will always be there. Okay, it does not keep changing. There are some changes in the SBR. I have shown you on the first day. I have uploaded that syllabus where I have shown you the syllabus of SBR. Please go and check. There I've shown some differences. The differences are not so major. Okay, so even with the old past paper, old revision kit, you can still do SBR. Okay, there's no so much of changes. The only changes comes in audit and tax. Tax, so definitely tax changes every year. Other than these two papers, the rest all remains the same. So that's a good thing. That's why I'm starting with this paper so that this paper remains the same and this you can apply in the future also. Okay, and don't forget to share it with your friends because most of the people does not know about my channel, right? That's why if most of the people start saying that why do I have so low subscribers? I should be having around thousands and thousands. I was like, the reason is because I don't market it, I don't promote it so much. I leave it to my students. I believe in the spread of mouth, spread of words, that whatever my students, whoever is watching me, if they find it good, they will go and promote it to their friends. That's what I believe. So I don't promote it so much, right? Saying that this is the best channel, this is where you will get everything. No. Ultimately, it's you people, so you people have to promote it. If you want others to benefit as well, and you want this channel to grow big, so that I upload every video. I upload videos from every DOAC paper. Every subject is included in this channel, so that students don't have to worry going here there. I know the pressure students are facing, especially when you are doing self-study. Like if you have a teacher who guides you, then they don't have to go through it. But since now the scenario has changed, COVID has changed everything, I don't think in the long term also students will be able to go to the teachers and learn in that way, right? So this is the new norm. We have to adapt to it. There's no other way, because even I was the one who never used to study online. But now, since the condition is such that we are forced to do it. And I think it is more convenient and more easier way also to reach students and also to help others, because every time student can, replay the video back over and over again, replay the back, and whenever they want to listen, they can listen it in their own sweet time, listen over and over again. Unlike going to the classroom where only once a teacher says and then that's it. Some of you might be writing notes, some of you might know. So take the advantage of it when you're having the advantage free of cost. There is no cost to you. So you do the promotion and make others aware, because it will benefit others. It's not just for my sake that I want to grow my channel. No, no, no. If it was like that, I would have promoted it a long time back. The reason is I want more and more ACCS students to, study free of cost and pass. Why to waste so much of time when you can pass in the first attempt free of cost with so much of experience, right? So take the advantage. It's up to you. And do like, okay, press the like button if you have liked my video, so that it gives me more motivation. It gives me a signal that yes, what I'm doing is I'm doing good, right? This is the way I should do more of it. So do put that. Don't forget to subscribe to my channel. Okay, and did take care and see you in my next video for the second question. Till then, bye bye, Allah Hafiz.